What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is April 17th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to talk about a lot of different things. I want to start off by talking about the short-term price action in Bitcoin and how we've gotten back above 7K, and why I still believe we're very much on pace to go to the upper $8,000 or $9,000 range going into the halving event. And along with that as well, I want to talk about the emergence of stablecoins, a potential major on-ramp for the cryptocurrency space as it becomes more mainstream and tested. And along with that, talking about a lot of major data points in regards to the economy, and not just in the economy, but also diving into specific commodity markets and equity markets. Okay, so we've got a ton of really interesting stuff to talk about. Let's just go ahead and dive right into it. So taking a look at the last 24 hours here, we can see the vast majority of cryptocurrencies are in the green, but for the most part, most are in a no trend scenario from 1 to 2% to the upside or downside. However, we do have some of our plays doing well. Energy at 6.46%, Chainlink at 3.5%, Ren sitting here at about 5.2%. So again, good play here, or good day here for most of our plays here in the sense of the market. One thing I wanted to share with you guys real quick is I've been speaking at a conference. It's a virtual conference called Blockdown 2020. And you guys probably heard me mention it for those of you who watch every single video. I talked about it a few times. And yeah, it was really awesome. I gave my speech yesterday. And along with that, I'm going to be on a panel later this afternoon for the second day at the conference. And this was a really cool illustration that a company called Idea Inc., which Blockdown has doing illustrations for all the speakers. They basically illustrated in a really awesome creative fashion all of the major points that I talked about in my speech. And it was a really, really cool design. I just wanted to give them props to this. I thought it was such a cool design. But just to give you guys a little bit of kind of an update on what it was about real quick, because I think it's a very relevant topic to what we talk about here on the channel. I basically culminated the idea that over the last 10 to 12 years, we hadn't really learned much from 2008. We continued to prop up the same or similar issues that had caused the crisis previously. We talked about excessive risk in the credit system through shadow banking. Basically shadow banks are banks that are less regulated. These are companies like Quicken Loans, a lot of companies that have started to dominate the mortgage and lending markets. Along with that as well, hedge funds taking on excessive leverage, and then also this kind of failed idea that monetary policy is going to fix the underlying economy, when in reality it propped up an asset bubble. And basically it transitioned into now COVID, bringing all those problems to the forefront. We have kicked the can down the road with a lot of stimulus in the past, and now it's finally coming to roost. And now we're getting to a point where we don't have the same firepower like we did back in the last recession. We can't lower interest rates as much as we want. We can print a ton of money, but it's going to start having secondary effects on people through inflation. So what's the best place you can park your capital when there's mass inflation and devaluation and, of course, possibly negative interest rates, which will penalize savers and those who own treasuries or other government bonds? Well, there's basically three assets in the world that do that: gold, silver, and Bitcoin. Plain and simple. There's a few other commodities you could probably match in there, but they're much more driven by market forces of supply and demand. These are more of the hedges that, in this case, provide you a way to get out of any kind of geopolitical or national ties, in this case, to any specific economy, if you will. That's the general gist of what Bitcoin offers here. And it offers an even better argument, the perfect store of value in this case, because of its limited supply, and more specifically, its finite supply. So anyways, I thought it was really cool. I just wanted to kind of give you guys a little bit of an update on what I talked about there. But I want to go ahead and talk about yesterday's performance. Markets did really well. We went from about 6,600 up to 7,100, recovering about 5 days worth of kind of stagnant sideways price action, coming back up and getting close back to the range we're at now, where we were back a week ago. I'm going to go ahead, just pull up the more relevant chart here in the short term. Bring up, I think, Bitstamp is the one I want. Yeah, this is Bitstamp. So again, getting very close to where we're still holding these gains here. And again, I want to emphasize here that we're continuing to set higher lows and higher highs here. Now, if the momentum really starts to stagnate sideways, yeah, I can understand there might be a sell-off. But right now, guys, this is looking pretty healthy here. I like seeing this. Again, we're showing consistency here. The major thing that I like to look for when it comes to Bitcoin, because Bitcoin is a fast-moving market, it has a very select few days where it does the vast majority of price action. This is something that Tom Lee brings up a lot. It's a very important thing to see in the market when you're curious about whether or not the trend's going to continue, or that if we're in like kind of a short-term bull phase or a long-term bull phase, that you'll want to see this consecutively on the daily and weekly. And that is consecutive green candles. But basically, when you have these kind of pullbacks for a week, week and a half, you have 2 or 3 days where it's made up instantly. Like buyers are basically FOMOing and they're buying in. Whether those are larger players or smaller retail buyers, basically you want to see those quick recoveries. So here's a good example back here, right? We had a pullback of 2 days. 1 day in, we close on all those losses and continue climbing higher. Again, back here, about 3 days where we really had downward price action, equal amount of time or less in order to get back up and then continue higher, right? So again, give or take, right? It's never going to be exactly perfect, but I like to see here more than anything these periods where the vast majority of gains hold, and then we have 1 or 2 days that just blast through. So I think we're going to probably get a continuation throughout today and tomorrow. But the major thing, no matter what happens here in the next 24, 48 hours, this still looks like to me that we're going to be probably rallying up here to test up towards the line of resistance. And you can see here, right, this is a long-term wedge. We've been talking about this a lot. This is where the halving event's going to be. We're getting very close to it. I think you have a lot of pressure applying buy-side price. You have some people FOMOing in because of the halving. I've told you guys personally, I don't believe that's usually like the right thing to do because we think we usually know there's a sell-off after the halving event. But some people are going to buy it anyways, just to simply speculate. I don't run the world, right? I'm just one voice in this whole sea of the cryptocurrency space, right? So some people are going to buy in anticipation for that. The second thing you have as well that actually does build some credence to this is we have China's central bank digital currency. And again, the short window of time that we have now, it seems, before that comes out, basically is a big thing that a lot of Chinese investors have to keep in mind, or people who hold a lot of wealth in China, because once they transition to that system, it is likely that they are never going to be able to get into Bitcoin, or it's going to have to be in some kind of system where they don't have their sovereignty over their wealth. It's a very, very important thing, because if their wealth is under a system that China controls, a central bank digital currency, in this case, that is going to be very, very bad for a lot of Chinese investors who don't want the CCP, in this case, to have control over their money, right? So anyways, just wanted to emphasize that. We saw some of the photos the other day leaking that, so I think this is showcasing a little bit of FOMO here. Volume overall, I mean, nothing crazy. I do like to see where we're at right now. I'm actually using a dollar adjusted volume metric here. If we take a look here maybe at the monthly, it might become a little more clear. But volume isn't too bad, but it's definitely not something I'm extremely excited about. And bear in mind, April isn't finished, so again, we're not going to get the full volume data until the end of the month. A little over halfway there. But all in all, guys, this looks like the longer-term technical pattern we were looking for all along. Higher lows, higher highs, halving event, pushes price still sideways for a while, and then we play pickup or play catch up basically and start leaping forward for the next logarithmic rise into 2021 and 2022. We'll see how it all plays out, guys. But again, keep focused on that long-term view. I know you guys can do it, and I know that for the vast majority of people, this is going to be the best way to look at the market, just focusing on the long-term perspective. All right. So let's go ahead and talk a little bit about stablecoins, because I know a lot of you had asked me the other day about the comments that the FSB made, and we're going to be talking about that as well. But I just wanted to go ahead and first talk about the demand here for stablecoins. So Circle CEO, Circle is one of the two companies that created USDC alongside Coinbase, and they basically have been claiming an explosive demand in stablecoins, and actually not just for traders and a lot of other individuals in the crypto space, but also for businesses as well. And this is something, again, that I've really proposed here about DeFi. We really need, whether it's more centralized finance or decentralized finance, we need to see a push for more loans to real-world applications outside of just over-collateralized margin trading or providing capital to exchanges in the short term. There's a lot of demand there, no doubt about it, but I think we need to start seeing, again, this kind of pivot here for stablecoins to serve in other areas of the economy, the real-world economy outside of just crypto, right? And I think, again, this is really exciting to see. So this is a chart here. This is, again, public data. You can take a look at it. Coinbase and Circle basically have been having an explosive amount of growth for their stablecoin here. Right here, if I get the exact number, I want to try to get something somewhere. About $460 million of USDC existed. And just in the past couple of weeks with COVID-19 and the rush to inject cash here, in this case in the stablecoin market, basically we have it well over around $730 million. So again, you're talking about a really nice increase here of about $300 million, nearly doubling the overall amount of USDC. And the nice thing about USDC is they're well audited. It's created by two of the most respectable companies in this space. Again, at the end of the day, this is a really good thing to see here, because if Tether did this, I wouldn't really bat an eye too much. But when I see USDC and Paxos and Gemini USD, and I see all these other stable coins doing really well, I think it speaks to a global trend here that USDC, as well as other stablecoins, can act as a really good bridge for institutional capital to get into crypto markets. And it's all done in a regulatory fashion. It's done by the books, and it's done by two companies who I highly respect in a lot of regards. So, again, keep an eye on this, guys. I think this is very important. Now, I know a lot of you have probably asked me already in the previous video. I know I didn't talk about it the other day because I wanted to talk a little bit on a few other topics in traditional markets, but the FSB, the Financial Stability Board in this case. This is a organization that, again, focuses on regulatory regulation on a global scale, and a lot of people here were asking me about these comments, again, from the G20 finance ministers about whether or not, this is going to have some effect on us. So this is something, again, notice how the article here that I pulled up here is from October 2019. This has been a discussion point for a while. The G20 and central bank governors have been talking about this for some time, and it makes sense why they want to talk about it. Because at the end of the day, you'll hear all these different reasons for it. They're going to say that there's probably risk in regards to having these censorship-resistant stable coins, because at the end of the day, basically, if I convert a dollar for a stable coin and I have it in my wallet, I can go around and I can use it just like I could cash, right? And that's kind of what a stable coin or digital dollar is. It should be that I can exchange it with someone, right? Just like I would with cash. But at the end of the day, there's some concern here from the FSB and a lot of other regulatory bodies that we need to consider the other systematic risks that come with this. And I would assume at the end of the day, it's the sheer fact that the FSB and the central bank governors and the G20 individuals who are coming and meeting there probably are concerned that they don't have centralized control over it. Okay. So this has been a debate between other central banks across the world who have talked about making central bank digital currencies. Some have said, should it be completely censorship resistant? Should it be completely private, where we don't know who is who when they're exchanging it? And some people have said, no, we need to have an actual ledger here. We need to have a backdoor to control. There's so many different perspectives, guys. And that's, again, the thing I stress. Not all central banks are on the same page. We make that very, very clear. I know it's very easy to jump the gun and say all of them are working in a cabal together. I understand the BIS and all that. That's very true. But there are different perspectives on how to approach this, no matter what their intentions are. And I think at the end of the day, this is really at the end of the day just surface level talk. We haven't seen any actionable, severe policy just yet, nor have we seen, if there is some ideas about how they would implement it, anything, again, being implemented in the actual system for crypto. And I think, again, the confidence that we're seeing between Circle and Coinbase in this case, again, proves to the success in this space. And I think that central banks, as well as the general, more important part of regulators, are going to allow this to continue to persist and just experiment with it for a while, because so far stable coins like USDC have provided nothing but benefits. At the end of the day, I can't think of one negative that they've brought. If anything, they've made it where people are able to digitally transfer dollars at a much faster rate than traditional systems. And honestly, the cynical part of me says that a lot of central bankers and a lot of traditional figureheads are probably hesitant for stablecoins because of that. It is severely more efficient. I can send dollars from here to Japan in less than a minute on Ethereum's blockchain, and I can do it for less than 1 or 2 cents worth of ETH. I mean, that's just incredible. That is huge. There are massive positive ramifications to that for remittance markets, for wire transfers, where it can cost me $25 to $45 to transfer money through a wire transfer. Can you believe that? So, anyway, something that's a fraction of that cost being able to be sent across the world. Again, very important thing to take into mind here. So I'm interested to see how this develops. I have no doubt that the FSB, if it really pushed hard enough, they could probably ban stablecoins. And I'm fine, honestly, with considering a central bank digital currency, but I want to know the properties of it, right? I mean, if it's going to be $1 stablecoin, that's fine with me. That's what I'm using when I'm using USDC. I'm just curious what they're going to do, because if they implement privacy and a few other features, such as the fact that they can't seize my dollars in this case, then in that case, I'm pretty excited about it. Pretty pumped. I think that'd be really cool, and I'd be interested to see what the Fed has to propose, as well as the ECB and the Bank of Japan and the Bank of England. But I really don't think I would trust the People's Bank of China. Sorry for being a bit stereotypical, but I've learned too much about not only the PBOC but also the CCP. Anyways, to a more positive note here, markets across the world rebounding a decent amount, continuing their rally, and this is not only due, of course, to Fed monetary policy and other central bank monetary policy, but this is coming out of a lot of confidence out of Gilead Sciences, one of the largest pharmaceutical companies, coming out with some successful phase 2 trials for their drug for COVID-19 and their vaccine that they're working on. So it's really good to see this. I think it's a little bit of a premature reaction. I have no doubt that eventually we're going to start seeing a pullback here over the next few days, guys, but I would not challenge or try to short this market. Maybe, if anything, I'll consider buying puts, like basically options in this case that would bet against the market over a certain period of time. But I would not be shorting or holding leverage short ETFs or anything. I know some people have asked me about that. And first off, I mean, again, I can't tell you guys what to do. You got to decide what you want to do. I personally wouldn't, because this is a moment of time where you've got excessive monetary policy, and the Fed has basically mentioned infinite QE. I can be bearish here, but I'll be honest, I'm bearish in the sense that I'm going to wait off, and I'm not really going to try to hold these things. Because quite frankly, guys, it's good to see equities doing this performance. And, at the end of the day and stuff, again, I've been set aside cash and stuff and considering positions in equities. But I'm in no rush to get into it. Crypto right now has been a net benefit more than anything I've ever held in equities, plain and simple. I've had some really good trades in the past with equities, but I think at the end of the day, it's no rush to get into this. All right. So enough rambling here. All right. Markets are going to open up about 2.3% to new relative highs here, or basically a little bit above where we closed the other day in the mid part of April. I want to go ahead here and talk about a few things here. First off, the sector sum index here on LMTR showcasing extremely risky behavior. So it basically aggregates a multitude of, I think, over 45 different industries. And this is basically, it measures if, like, for example, industrials are overbought, or, consumer discretionary or technology. Each of these will add a point in this case in the sector. And you can see here we went from negative 40, probably negative 42, up to about 40, 41. So I would say in this case to be a little bit cautious. And again, this speaks to the tone of what I was discussing earlier. Now, initial unemployment claims. This is very important to take into mind, guys. Over the next few weeks from April to May, we are going to see, again, continued week-by-week increases, in this case, of millions of people basically claiming unemployment in this case. Now, each of these weeks, again, this is not a declining number in the overall cases of people who are on unemployment or filing for unemployment. This is the declining growth. Okay, and after this, the real shock right here is going to happen over these weeks, and then after that, it will likely stagnate. But the important thing to make it, keep in mind here. Sorry, I think the important thing to keep in mind here is that every single week we postpone this opening, right? These ramifications come in, and I'm not saying that's not the smart move to just hold off and make sure we can contain it, or come better prepared and knock down the cases and flatten the curve. What I am saying is that this is why I've mentioned very strongly that this is going to have long-term ramifications. Another chart here. This really sets it in stone. This is the official unemployment rate forecast. There's U3, U5, and U6 for different measures of unemployment. Now, taking the more conservative measures for unemployment, which again do not include things like people on basically people who are working part-time, very short hours, or for example might not be seeking work, you're still going to have unemployment anywhere from around 10 to 12% here in November of 2020. And over the summer, that's expected to finalize around 15%. Now, if you're talking towards a much more realistic statistic of U6, right? Now, U6 is a little far out there. It's considering everyone who's not employed in this case, or a very large number of individuals. Again, I think honestly both of these metrics are a little bit too biased in one way or another. We've talked about it on shadow stats and a few other things. And I think it's good to have this data in these different perspectives. But what I would say is we're somewhere in the middle. 20% of the economy is not going to be working this summer. And along with that as well, going into the fall, that's going to be about the same case as we press towards 15%. And it's going to persist for a very long time period. We're going to be between 15 to 10% unemployment going into 2021. Don't doubt that this is not only a recession, guys, but these are numbers that we haven't seen since the Great Depression. And that's the thing that I drill so hard here. It's so sad because I don't want this to be the case, but even the forecasts are saying this. So again, unless we can have some kind of miracle happen, if we expedite a vaccine, if the Fed, again, provides more stimulus in the short term but doesn't completely destroy the dollar, and we get the flow of things going again, possibly we can avert a depression and only make this a short-term recession. Who knows? I personally don't think that's the case. I'm just trying to be a realist, guys. Anyways, wanted to talk about some interesting ratios here. S&P 500 related to the 10-year Treasury yield. Very, very interesting. Measuring the yield here on the Treasury. And basically showcasing here a massive decline, biggest drop here that we've seen for a long period of time, all the way back, I think, back to the 1980s. Very interesting correlation. Again, showcasing, I think, the kind of peak in the bond market here that we've been seeing. Again, it's probably going to continue rallying, but again, as we go into negative interest rates, bond prices can go skyrocketing, right? So again, very important thing to keep in mind. Along with that as well, gold to oil ratio, all-time highs. We've had all these peaks in the past year, setting up to a massive ratio with gold picking up steam, oil dropping like a rock. We've had a really interesting ratio. Again, what I always encourage guys, it's on IsabelNet and a lot of other websites, look at the ratios, right? You don't see this on the mainstream headlines, but this is the kind of stuff you want to look at. Look at ratios between commodities and not just commodities, but markets and commodities, other stocks between one another. It's very, very interesting. All right. 5 largest companies in the S&P 500 taking up 19% of overall market cap for the S&P 500, the largest number in history, breaking up the previous high back here during the dot-com bubble. Incredible stuff. Even after the sell-off, they've continued to grow market dominance. Now, this is, again, like another way of looking at market dominance like we do in crypto markets. 19%, nearly 20%. Doesn't surprise me, though. Amazon's been dominating the market right now in the sense of making shipments during the time of COVID-19. It's more relevant than ever. You've got Facebook, Netflix, Apple. All these companies are still prevalent one way or another, right? And then last thing I wanted to talk about here, one thing I always try to emphasize with gold. All right, a lot of things that people always bring up about an argument about gold being a commodity and therefore it can be a store of value because it has industrial use case. One thing I always talk about is to take a look at what gold is used for. One thing I just want to share here, gold is a store of value. At the end of the day, it's a great store of value. And along with that as well, yes, it does have some industrial applications, but its value is derived simply from the fact of its properties being great for store of value. And I can explain that here by taking a look at the chart. We see here that for over 20% is foreign investments, 48% is jewelry. Now, again, this is where some people would debate and they say, oh, this is utility. It's not an industrial utility. This is a store of wealth. But it's a way to showcase that wealth. Along with that as well, you have central banks and other institutions owning 15%. And then investment ETFs like GLD owning up to 9.21%. So if you take all of these numbers, right, you can calculate it, but a really simple way to look at it is just take the number of technology in this case for its actual commercial use. So it's 92.5% of all gold that is used simply to store wealth. It's either sitting in a vault or it's sitting on your finger or your neck in this case for a chain, right? It's basically because of the properties, guys. It's not because of its properties in industrial use cases. It's its properties in regards to a store of value. Wanted to share this because I thought Isabel not sharing this was really cool. I've seen a chart similar to this before, but I always try to stress it. Again, a lot of different interesting data points, guys. And a lot of things are going on right now. A lot of interesting changes here in the crypto space. So again, I want to go ahead and emphasize a few key things here, guys. We're definitely keeping an eye on equity markets. We're certainly keeping an eye on gold and silver, as gold and silver have continued to pick up here over the last few days. It's still holding up here towards the relative highs, looking like it might make support here on previous resistance. Silver's still down a little bit comparative to gold in this case, not making new highs, but we have recovered a lot of the losses here. Silver's had a nice rally here over the last few weeks. But again, we're going to keep an eye on all of this. The major thing, though, is that I am most bullish on cryptocurrency markets personally. And for those of you out there who have cryptocurrency positions, the one thing I recommend you all to check out, especially as we have this extension towards tax filing this year, is check out TaxBit. Now, you guys have probably heard about TaxBit if you've been a big fan of the channel and watched videos consecutively. But just to let you all know, TaxBit is our sponsor here on the channel, and they produce tax software that allows you to generate tax forms for your cryptocurrency positions and your trades to know exactly how much taxes you owe. And you can plug in all your exchange platforms. And again, it's a really simple and smooth platform where all you have to do is simply plug in your API keys, and then after that, your taxes are filed. So I recommend you guys check it out, see if it's fit for you, and along with that as well, thank you guys for watching the video. I hope you all are having a fantastic day wherever you are. There's a link down below if you want to check out TaxBit to get 10% off on any of the packages. That being said, though, guys, thank you all so much for watching, and I'll see you all in the next video. Stay tuned.